they have no choice at this point, and they will just acquiesce into reigniting the inflation machine. They're trapped. They're trapped between inflation and austerity. They're trapped between, if they raise rates, they blow up the system, and if they don't raise rates, and again, that would be to keep inflation in check. And if they don't, which they won't, you're going to see inflation, I think, just get out of control. And even if the budget was balanced today, we still have nearly 200 trillion in funded and unfunded liabilities that need to be paid for. We are a country that is addicted to spending, period. And at the level of debt creation, they have no choice but to lower rates. The whole system is on the verge of breaking apart, and they will do what all governments have done since the beginning of time, and that is acquiesce to inflation. But look, there's all this talk of the massive insider selling and Buffett selling $71 million worth of Bank of America shares and dumping his Apple shares, and the insiders see something coming, no question about it. And the Fed is late in all of their actions. This will be no different. We are not out of the woods yet, and a 50-point or 75-point decrease in interest rates isn't going to do much for it anyway. I think one of the things that's worth mentioning, everyone focuses on how good gold has done and laments at silver's performance, and I think that's part and parcel with the way that we expect markets to behave these days, where we've seen such massive increases in prices that happen so fast in tech and in crypto that we don't really notice. But look, silver's rallied by over 100% since its low in 2020. It's up 105, 110% from its low point of under $12 an ounce. And I think that probably comes as a surprise to people who are just following silver kind of passively, watching gold at $2,400 an ounce. Silver will have its day, no question about it. And I think, guys like Warren, I'm sure they notice very well and understand very well gold and silver, and probably have a significant position in it, just don't tell the world about it. They make their money he makes his money on equities. And so I understand that, but I think for him to expect him to not understand it. Look, gold has outperformed the S&P 500, even with dividends reinvested, for 25 years. It's averaged 9.9% compounding since the beginning of the century. That's outpaced just about anything Warren owns. And I think it would be foolish to assume that he doesn't own any. He may not talk it, but when you have the wealth that he does and your influence is centered around traditional assets and securities in American corporations, that makes sense to me. But don't be surprised if he and others like him have nice stashes of gold and silver physically held safely away somewhere to protect even his large stack of cash. So I guess we'll have to see if he's going to add any to Berkshire Hathaway, looking for a value. You sure think he'd find some in the mining shares. I know he's added mining shares before. I don't know. I haven't looked lately to see if he has any in there now, but geez, I couldn't think of a better place to find value for a value-based investor like Warren. And everyone talks about the horrendous debt burden that all these Western countries are in, and we are, and they are. But to realize that there's inflate or default, I talked about finding a villain, Putin and Xi Jinping, and using the dumping of dollars and treasuries that we have incited as a rallying cry and pointing to a villain that resets the system. But number 4, the option of revaluing gold is probably the least painful of all.
In the current economic landscape, central banks and governments are caught in a precarious position, one that has become increasingly difficult to navigate. As Andy Schectman eloquently outlines, the world's financial leaders are trapped between the rock of inflation and the hard place of austerity. The choices before them are stark. If they raise interest rates to combat inflation, they risk blowing up the already fragile financial system. On the other hand, if they refrain from raising rates, inflation could spiral out of control. This dilemma is exacerbated by the immense debt burden that Western nations, particularly the United States, have accumulated over the years. The U.S. is a country deeply addicted to spending, with nearly $200 trillion in funded and unfunded liabilities that need to be addressed. Even if the budget were miraculously balanced today, the sheer magnitude of existing debt would still pose a significant challenge. The situation is akin to a person drowning in debt, who instead of cutting back on expenses, continues to borrow more to stay afloat. As Schectman highlights, the level of debt creation has reached a point where there is no choice but to lower interest rates. The entire financial system is teetering on the edge of collapse, and the only tool left in the government's arsenal is to reignite the inflation machine. Inflation, however, is a double-edged sword. While it can reduce the real value of debt, making it easier to pay off, it also erodes the purchasing power of money. This means that ordinary citizens, who are already struggling with rising costs, will find their financial burdens increasing. For the government, this strategy is a temporary fix at best, one that could lead to more severe consequences down the road. Amidst this financial turmoil, there has been a significant amount of insider selling, with prominent figures like Warren Buffett offloading shares of major companies like Bank of America and Apple. This insider activity is often a red flag, signaling that those with the most knowledge about the market see trouble on the horizon. As Schectman points out, the Federal Reserve has a history of being late in its actions, and this time is no different. A reduction in interest rates, whether by 50 or 75 basis points, may not be enough to stave off the impending economic storm. While much of the focus has been on gold's performance, silver has quietly staged an impressive rally, increasing by over 100% since its low in 2020. Despite this, silver often flies under the radar, overshadowed by the more glamorous gold. However, Schectman reminds us that silver, like gold, is a vital component of a diversified portfolio. It has historically been undervalued and could have significant upside potential, especially as inflation continues to erode the value of fiat currencies. One of the reasons for silver's underperformance relative to gold is the difference in market perception. In a world where tech stocks and cryptocurrencies have seen massive price increases, the slower, steadier rise of silver may seem less impressive. However, this perspective overlooks the fundamental value that silver brings to the table. As an industrial metal, silver is essential in a wide range of applications, from electronics to solar panels, making it a critical asset in the transition to a green economy. It would be a mistake to assume that the wealthiest individuals and institutions are ignoring gold and silver. On the contrary, figures like Warren Buffett, who traditionally make their money through equities, likely hold substantial positions in these precious metals. Even if they don't broadcast it, the fact that gold has outperformed the S&P 500 over the past 25 years, averaging nearly 10% compounded annual growth, suggests that savvy investors recognize its value as a long-term store of wealth. Buffett's public persona may be centered around traditional assets and American corporations, but it would be naive to think he doesn't understand the importance of gold and silver. After all, gold has consistently outpaced many of the assets in his portfolio, and holding it as a hedge against the uncertainties of the market makes perfect sense. The same goes for other wealthy individuals who, while publicly investing in stocks and bonds, likely have significant holdings in physical gold and silver stored safely away.
Yeah, it's been a really very busy day today. I think people, Chris, realize that things are beginning to break, and they realize that a sell-off like this often happens counterintuitively. You know, I never know what to make of it. People say the conventional wisdom is that you throw out the baby with the bathwater in order to meet, for example, margin requirements. And if you look at the unwinding of the carry trade, it would certainly, with the yen strengthening the way that it has been, it would elicit margin calls on these levered positions. And whether or not it's people selling their gold and silver because it's so highly liquid, or it's just the cartel's way of continuing to step on things to make the perception of gold and silver being the place to run, kind of trying to sever that relationship, which is more along the lines of what I think people are seeing through that. The tricks and the methods that have been used for a very long time, I think, are growing long in the tooth, and they are becoming far more transparent to the investing public. And I would say today's been one of the busiest days we've had in months, literally, maybe even going back to last year when we had the banks fail. People are not dissuaded whatsoever. In fact, I think they're quite incentivized to see the value that is found here in a price that just got, clubbed. Although it's interesting with gold, it's back above $2,400 and only down a little bit right now. The futures I show only down $23.50. They were down as much as 70 plus earlier this morning. And so I think that this is a short-term knee-jerk reaction, but I don't think we're out of the woods yet in any respect as to how this all plays out. One other note, I think it's important when we talk about what gold is doing, and when you look at it in the light of Japan, where it looks like, by all intent and purposes, the wheels appear to be coming off. 10 years ago, an ounce of gold was about 140,000 yen. 5 years ago, it was about 150,000 yen. That's a 7+% change in 5 years. It was 200,000 yen in 2020 and roughly 250,000 yen in October 2022. In 18 months from 2020 to 22, the price of gold went up $25 in yen. It spiked to 278,000 yen in July of 2023. And as of just the other day, not too long ago, just a couple of days ago, we were over 383,000 yen. That's 38% increase in 1 year. So you can see as the yen has really gotten into trouble, gold has done what it is supposed to do, and it has gone much, much higher. So I'm not worried about where gold and silver end up. I think this knee-jerk reaction is exactly the way our clients are reading it, and it's a subsidy, it's an opportunity. What we're seeing is a currency that's collapsing, and all the intervention in the world, what it perhaps has done is prick the everything bubble, and that's kind of the way that it looks like right now, with everything getting clobbered.
As the global financial system continues to unravel, one of the most likely outcomes is the revaluation of gold. Historically, during times of economic crisis, governments have turned to gold to restore confidence in their currencies. Schectman notes that this is the least painful option among the various choices available to manage the current debt burden. Revaluing gold allows governments to inflate away their debt without triggering a full-blown economic collapse. This move would not be unprecedented. Similar strategies have been employed in the past, such as during the Great Depression and after World War II. In today's context, revaluing gold would mean significantly increasing its official price, potentially to levels that reflect its true market value. Given the ongoing accumulation of gold by central banks around the world, this seems not only possible, but likely. Countries like China and Russia have been steadily increasing their gold reserves, positioning themselves to benefit from any future revaluation. This strategy also serves as a hedge against the devaluation of the US dollar, which many see as inevitable given the current economic policies. While gold often takes center stage in discussions about wealth preservation, silver plays an equally important role, especially in a future where industrial demand continues to rise. The ongoing manipulation of silver prices by a few large banks has kept the metal undervalued for years. However, as these banks begin to unwind their short positions, the true value of silver is likely to become apparent. Silver's role in the military-industrial complex, particularly in high-tech weaponry and aerospace applications, adds another layer of complexity to the situation. The metal is critical for the production of advanced technologies, making it a strategic asset that governments and corporations alike cannot afford to ignore. As demand for these technologies grows, so too will the demand for silver, pushing prices higher. The actions of central banks and wealthy investors around the world point to a clear trend: the quiet accumulation of gold and silver in anticipation of a major shift in the global financial order. Schectman lists numerous countries, from Germany and Austria to Saudi Arabia and India, that have been repatriating their gold and increasing their reserves. This is a clear indication that these nations are preparing for a future where gold, rather than fiat currencies, plays a central role in international finance. The reclassification of gold as a Tier 1 asset by the Bank for International Settlements, BIS, further underscores this point. By elevating gold to the highest status in the financial hierarchy, The BIS is signaling that gold will be a key component of any new financial system that emerges from the current crisis. For individual investors, the current environment presents both challenges and opportunities. On one hand, the manipulation of precious metal prices by large financial institutions creates short-term volatility and uncertainty. On the other hand, this very manipulation has kept prices artificially low, creating a buying opportunity for those who recognize the long-term value of gold and silver. Investors should consider increasing their exposure to these metals, both through physical holdings and through investments in mining companies and ETFs that are backed by physical assets. As the global financial system continues to evolve, those who hold tangible assets like gold and silver will be better positioned to weather the storm and protect their wealth. Looking ahead, the long-term outlook for gold and silver remains strong. As Schectman points out, the recent sell-off in gold and silver markets, likely driven by margin calls and short-term liquidity needs, does not change the fundamental dynamics at play. In fact, these sell-offs often present buying opportunities for astute investors who understand the bigger picture. In countries like Japan, where the currency is rapidly losing value, gold has performed exactly as expected, rising significantly in response to the devaluation of the yen. This trend is likely to continue as more countries face similar challenges. The global economy is entering a period of profound change, and those who are prepared will thrive. In conclusion, the revaluation of gold and silver is not just a possibility, it is an inevitability in the current economic climate. The ongoing accumulation of these metals by central banks and wealthy investors is a clear indication that the world is preparing for a shift away from fiat currencies and towards tangible assets. For individual investors, the time to act is now. By increasing exposure to gold and silver, either through physical holdings or strategic investments, one can protect wealth from the coming financial storm and position for long-term growth. As we move into an era of unprecedented economic challenges, gold and silver stand out as the ultimate safe havens. These metals have withstood the test of time, serving as reliable stores of value in a world where fiat currencies are increasingly under pressure. By investing in gold and silver, individuals can safeguard their financial future, ensuring that they are prepared for whatever the future may hold. For American and allied citizens, recognizing the strategic importance of gold and silver in preserving national economic security is crucial. As global economic dynamics shift and fiat currencies face increasing pressure, these precious metals provide a reliable foundation for wealth preservation. By investing in gold and silver, you not only protect your financial future, but also contribute to the broader goal of economic stability and resilience. Stay informed, take proactive steps, and ensure that your investment strategy includes these timeless assets. In a world of uncertainty, gold and silver offer a beacon of stability and security.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today. Link in the description.